This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news that as we await our local labour market report, the global economy is expanding modestly, but inflation isn't killed off yet. First in the US, labour costs rose 4.2% in the year to March, up 1.2% from the prior quarter. This is their highest rate of increase since mid-2022, and is more indication that inflation's pressures remain at a sticky level, not excessively high, but not tracking down as their central bank needs. American retail sales at physical stores were up 5.5% last week from the same week a year ago, another indicator that consumers are still spending those higher payroll increases and keeping inflationary pressures on. But the Conference Board survey of American consumer sentiment retreated in April. What American consumers say and what they do is diverting again. This time it isn't about present conditions, which they think are okay, but rather about future conditions, which they're more worried about. But there are some interesting differences. Those on modest incomes are more confident than those on higher incomes. Those under 35 are more confident than those older. In Japan, it is becoming clearer that their central bank did in fact intervene in currency markets to support the yen yesterday. And in China, the private Caixin factory PMI survey was more bullish than the official one. The modest Caixin expansion held in April, and in fact it's their sixth straight month of growth in factory activity from this survey, which is concentrated in smaller private sector firms. And even though low, it was their fastest pace since February 2023. On the other hand, the official factory PMI survey, which is more focused on large state-owned enterprises, was less positive, even if it was their second straight month of low expansion in factory activity. Basically, it's just holding. More positive is the official services PMI, but that was less positive in April than March and came in well below what analysts were expecting, and the softest pace since January as new orders shrink at a steeper rate. But it is still positive, and that streak is now out to 16 consecutive months. In an earnings call comment, the Yili boss said Chinese milk supply has been higher than demand, which isn't growing as it once did. But he was optimistic that the back end of 2024 would improve for the Chinese dairy industry. In Europe, they said their April inflation was stable at 2.4%, and their overall economy grew 0.5% in the year to March, which was a bit better than expected. Interestingly, though, it was led by Spain, Portugal, France and Greece, and held back by Germany. In Australia, retail sales were softer than expected in March, dropping by 0.4% from February and missing market estimates of a 0.2% growth. February was also downwardly revised. It was their first decline since last December as turnover fell in all retail sectors. Locally, we'll get our March quarter labour market data this morning, and we'll have a full update then at 10:45 a.m. And the RBNZ releases its important financial stability report prior to that at 9 a.m, and we'll have full coverage of that too. The US Treasury 10-year yield is now at 4.68% and up 6 basis points from yesterday. And the price of gold will start today much lower, down $46 at $2,294 an ounce. And oil prices are down another $1 from yesterday at just under $81.50 a barrel in the US, while the international Brent price is now down to $86 a barrel. And the Kiwi dollar starts today down 0.75 cents at just over 59 US cents. Against the Aussie, we're holding at 91 Australian cents. Against the euro, we're 0.5 cent lower at 55.3 euro cents. That all means our trade weighted index starts today at just under 68.9 and down 40 basis points from yesterday. And the Bitcoin price starts today at $60,270 and 4.4% lower than this time yesterday. And this is a 2-month low. Volatility over the past 24 hours has remained very high at plus or minus 3.9%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.